Okay, so let's head to the crypto space now, where it's been mostly neutral. We're talking about the sentiments in the market.
Yeah.
I don't know if, it's neutral today.
Yeah, we're still at neutral.
Yeah, well, it's
no
January.
No direction.
No direction. I think investors are just looking out and being very careful before they make, any major decision this year, 2023. Still early in the year, though.
We know how, risk assets suffered in 2022, and obviously
the FTX thing, Bitcoin, I think the memory is still there.
FTX is still very fresh in the memory of investors.
Exactly.
And we still have that Gemini issue, still brewing, the market. Now, they just filed for bankruptcy. That's a massive, crypto company. So all of that weighing on the market, and we're seeing, safe haven assets like gold hitting new highs, this year, but the digital gold isn't doing as well. And that's what we're seeing neutral in this market, 51 points. That's the sentiment in the crypto space right now. Let's look at the market cap this morning. Failed to break that 1 trillion mark this week. There were indications that would happen, this week, but we've not seen that. It's up 0.73%. Volume traded, that's down about 32.30%. We see Bitcoin dominance sitting at 41.42%. Let's look at the price of Bitcoin, $20,956 lost. It didn't break that 21.5 resistance level that we're hoping it would break, but it didn't happen. It's down 0.29%. So any correction further downward could break to another support level. Talking about the price of Bitcoin, looking at 20,500 level. Hopefully that holds. Volume traded $40.38 billion. And we see Ethereum also having some volatility too, $1,545. Wondering if 1.5 is going to hold going forward. It's down 0.29%. Volume, still big volume. We've seen it in the mornings, $18.91 billion. Let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon. Good morning.
Good morning, Hardy.
Good morning. So we had the first week of January looking quite, bullish, but, the first half of January, we've seen Bitcoin and the market cap almost break that 1 trillion mark. But looking at how hammered most of these assets are, especially Bitcoin, which assets do you think are overvalued at this time or undervalued?
Okay, so basically, I feel we have a few overvalued assets short term, but the market is basically long term. Most of the assets are currently undervalued. But let me just state a few assets that are short term overvalued. So I would say Aptos blockchain is actually overvalued short term, and I also say Lido DAO is also overvalued short term, basically. So for me, I would say these two assets short term, they are very much overvalued.
And obviously, we see the resistance, that 1 trillion market cap resistance is proving quite, hard to break at this point. There were indications that it might, be broken this week, but that's not happening. When do you see that happening, and what kind of catalyst are you seeing that's going to break that resistance?
Okay, I think Bitcoin will play a major role for the market cap beating $1 trillion. And it will be very, very important, because once we are able to beat $1 trillion, we'll see the market cap hit at least $1.5 trillion. So the major critical token I'm looking at spearheading the break of $1 trillion is Bitcoin. If Bitcoin is able to go past $25,000, I strongly believe that other tokens will rally strongly behind Bitcoin, and we'll see the market cap hit about $1.4 to $1.5 trillion.
And obviously, we know the crypto market doesn't sleep. They're still going to be trading over the weekend. What are you expecting for, volatility in the weekend, going into next week?
Yeah, I'm still expecting very strong consolidation for Bitcoin. So far, so good. It's still standing right above $20,500. But I'm very, very much optimistic that Bitcoin should correct down to $19,000 before making a move to about $22,000 to $23,000. So this weekend, I'm expecting more consolidation on Bitcoin and Ethereum.
All right. We're watching out for that. Thank you so much, Solomon Amunde.
All right. Thank you.